Hey, this is Troy Stavros with Doorbell Real Estate, and it is time for our monthly market update now that we have all the data in through the end of October. So let's kind of take a look and see how things are faring in the East Tennessee and Knoxville markets. There are some interesting things to take a look at, and we'll compare those things to what's happening nationally as well. Let's jump in. Okay, in East Tennessee, when we take a look at the year-over-year difference between October of 2022 compared to last year, home sales are down 5.4%. Pending sales are down 9.4%. Inventory of homes is up 1.7%. New listings are up 3.3%. The median sales price as a percentage is still up 18.52% compared to where it was a year ago. Last month we were up 19.85, so we're starting to see things moderate. But here's something that is interesting and something that we'll keep an eye on. The median sales price came in at $315,000, which is down from last month. Last month, that same number came in at $320,500. So this is the first time we've seen a pretty decent little drop in the month-over-month median sales price. And we know, and we're going to talk some more about this later, but we know that we can account that to what's happening with mortgage interest rates and obviously what's happening in the economy. But the interesting thing will be is when we compare that to what it looks like nationally. But yes, there was a downtick in all of East Tennessee in the median sales price. You could see about a $5,000 drop, $5,500 drop compared to last month. But we're going to take a look and kind of see how things have bounced around a little bit in the median sales price. Absorption rate, which we know is the amount of inventory available on a monthly basis, is actually up slightly from last month. We're at a little over 2 months worth of inventory in East Tennessee. Last month we were at 2.12. This month we're at 2.15. So a little uptick in inventory, but still very, very low inventory when a healthy market is in the 5 to 6 month range. Let's take a look at the numbers, some numbers here. Let's zoom in over here and just kind of take a look and see. You can see over here in this first chart the number of listings as far as inventory goes. Active listings have seen a steady incline since April through about January of this year, of July of this year, and then it's kind of leveled off a little bit. And that is because we're seeing things maybe stay on the market a little bit longer. So we are seeing a little bit more inventory, which is good. Over here in the list prices and the sold median sales price, let's take a look at the sold median sales price here by itself, just so we can kind of look at what this looks like over the last year. So we saw prices going up, and kind of capping out around May, and then starting to kind of bounce down here in June. So they were up here, 331, they came down, then they bounced back up in August. And then they've been kind of coming down a little bit here over the last 2 months. So we are seeing, and this is a direct correlation to what has happened with interest rates. Right around here is where we started seeing interest rates start getting into the 5, 6, and now 7% range. So that is definitely affecting the list prices and what is happening with home sales. And that's at a direct correlation to what the Fed is doing with the interest rates. They're continuing to increase the rates, so that directly affects mortgage rates as well as they try and fight inflation. Let's go down here. Because we are seeing prices drop and we're seeing more inventory, the sale to list ratio is definitely coming down, which is telling us that we're seeing more negotiation power for buyers. So starting in April, we started seeing a little bit more negotiation power right here. So these two lines are this gold line here is the straight sale to list ratio, meaning what the final list price of the home was compared to what it ultimately sold for. The black line is what the original sales price was before there were any price reductions. So you can see there definitely have been more price reductions, because the homes that have had price reductions, when you compare the original sales price to what it ultimately sold for, it's significantly less than, it's about 2 percentage points less than what it is from the regular sales price. But let's just kind of get rid of the original one and just look at this one here. Starting in June, we were still above 100%. So things were selling in East Tennessee basically above list price. In July, we started dipping below that a little bit. We're starting to see a little bit more negotiation from sellers, and then that has continued on. August came down further, September came down further, and then October came down even further. So while interest rates are high at 7%, you have the ability to do a little bit more negotiation as a buyer. So you can get a house for less. You're not going to have to deal with giving up your contingencies on most cases. So it gives you a better opportunity for a buyer to get into a home at a better price with more contingencies like appraisal contingencies, inspections, things of that sort. And yes, you may be paying a higher rate now, but always know that down the line, you can secure the house now at the price now and then refinance your interest rate later to a lower interest rate to reduce your mortgage payment at that point in time. One thing, also take a look, the days on the market since July has been increasing. So in July, we were around 14 days on the market, and now in October, we're on average over a month on the market. So we are definitely seeing the effects of what is happening. All right, let's take a look at Knoxville. So Knoxville, year over year, home sales are down 12.3% compared to last year. Pending sales are down 12.7%. The inventory of homes is down 8.3%. And this is something to keep in mind. You're hearing a lot on the national news is how inventory is, there's so much more inventory, but in parts of town, there is less inventory now than there was a year ago. Judging from this right here, the number of active homes for sale are down 8.3% right now compared to a year ago. New listings are also down 4.9%. The median sales price is still 19.01% higher than it was a year ago. So that is still a big number. And the median sales price came in at $333,000 in Knoxville. And when we say Knoxville, again, that's any place that has a Knoxville, Tennessee address. But last month we were at $338,000, so we did see a little downtick in the median sales price in the Knoxville area. Absorption rate still really struggling for inventory in Knoxville. We are at 1.33 months. Last month we were at 1.31, so yes, we saw a little bit of an uptick in inventory, but I mean, we aren't even at 2 months worth of inventory in Knoxville. So that is staggeringly low when a healthy market is at 5 to 6%. Okay, let's jump over and take a look at some of these numbers here. The median sales price we talked about earlier. This is the Knoxville area. February was going gangbusters till it got to about June, and then has kind of bounced around. July, August came back up, and then starting September, October, we started to see it come down a little bit. Once again, corresponding with those interest rates going up. Number of listings, the red line is active listings. So if we look at, let's get rid of those other ones so you can see a better picture of that. But active listings from February just kept climbing, and then they kind of leveled off. But, we are still seeing a low number of homes on the market for sale. Absorption rate, this is again talking about inventory. We are seeing inventory come up a little bit, which is good. Sale to list price ratio, again, just like we were talking about in all of East Tennessee, the same holds true in Knoxville. We are seeing more negotiation happening. So we were well above 100% in April, well above in May, well above in June. In July, we got to about 101%, so things still selling above list price. Then we got to August, we were almost level, and just now we're starting to see things come down and a little bit more negotiation off the price happening in Knoxville over the last 2 months. Days on the market has also been increasing, but not as much as it did in all of East Tennessee. In Knoxville, we've seen it go from 9 days in July to now about 20 days in October. Okay, let's take a look at Farragut here. Farragut home sales are down 14.1%. Pending sales are down 10.6%. Inventory of homes down 1.9%. New listings are up 1.9%. The median sales price is still 17.7% above where it was last year. So still the numbers are coming in considerably better as far as the median sales price compared to a year ago. And that median sales price coming in at $605,000. The absorption rate in Farragut still under 2 months worth of inventory. Again, really, really low, but a little bit better than last month, coming in at 1.72 months worth this month, where last month we were at 1.45. Let's go here and take a look at the numbers. Let's go to Farragut. Let's take a look and see what those numbers look like. Again, we're dealing with a low number of listings here. So things like average list price or average sale price is going to bounce around because a house that sells for a big number, which can happen in Farragut fairly regularly, could change those numbers specifically. So we're bouncing around the 600 range. But you can see, this was last year. The highest that we've gotten over the last year is 661. Then October, the median sales price was coming in about 680. So it's definitely staying around that same range, not seeing prices really drop in Farragut. But we did start seeing a little bit more negotiation in Farragut. When we look in April, we were coming down. We're way up at 105%, meaning you were paying well over list price for a home. Then that started coming down. July, we got to about 102%, and then we about leveled off at 100% in August, dropped down to 99% in September, and then we jumped back up in October to 100%. So not as much negotiation happening in Farragut just because inventory is so scarce. Days on the market in Farragut coming in right around 15 days. All right, let's take a look at the counties in East Tennessee and see what's happening there. Okay, so Roane County, available inventory is down 8.3%. Pending sales are down 14.1%. And the median sales price in Roane County is coming in at 17.78% higher than it was last year. Let's go take a look at the numbers here. Roane County for October. Let's look and see what these numbers look like. Okay, so we're kind of bouncing around, not a whole lot of different as far as the median sales price, but they aren't coming down. I mean, it started coming down, like if you drew a line here, you would see that it started coming down in May and then it ticked back up. So we aren't seeing big drastic changes, but we are seeing things kind of moderate a little bit. The number of listings has increased since May, but has started leveling off and actually coming down a little bit. Sold to list price ratio in May was well above list price, and then started coming down to under list price right around June, July, and then has just been kind of bouncing around. So there is still some negotiation happening in Roane County. Days on the market right now are just under about a month on average. Knox County available inventory is down 7.5%. Pending sales are down 12.6%. And then the median sales price in Knox County is up 19.44% compared to last year. Let's take a look at those numbers in Knox County on the charts. So Knox County through October. You can see the median sales price has been rising since February all the way up, and then has kind of been steadily working its way down a little bit month to month. It kind of leveled off here between July and August, and then we saw it start coming down in September, October. That's the thing that we're just going to have to keep an eye on, is what is happening on a month-over-month basis. But again, this drop right here is in direct correlation with interest rates rising above 7%. And we're going to talk a little bit more about why that makes such an impact in a little bit. Number of listings, we are seeing some more listings come on the market, active listings. These aren't necessarily new listings, these are all listings. So if we're seeing more, we can actually show you here, new listings are actually coming down, active listings are leveling off. That's because we're not seeing as many people putting their homes on the market because, one, homes are expensive, and two, because of the interest rates again. If a seller now who has a home that has bought within the last few years, or refinanced, they probably have an interest rate right around sometimes in the 2s, 3%. So they would have to give up that interest rate and then get a new interest rate above 7% if they wanted to go buy something. So there's not a lot of motivation for them to go out and put their house on the market right now, unless they either really need to or they really find a house that suits what they need that much better than what they're currently in. Here we are seeing a lot more negotiation happening. We broke the 100% barrier right around August and then into September and have been moving down, but still we're about 99% here in Knox County. So not as much negotiation happening within Knox County simply because inventory is so low. Anderson County available inventory is down 14.6%. Pending sales are down 17.3%, and the median sales price is up year over year 14.67% in Anderson County. Let's take a look, just a quick look at the Anderson County graphs. You can see there has definitely been, things were bouncing around price-wise, have been increasing in April, May, then kept increasing through August, and then saw a pretty big drop here between September and October. But again, we are not dealing with a huge amount of homes here. So if there's a significant sale, that can affect this number pretty drastically, and as opposed to when we're looking at numbers like for all of East Tennessee, when we're looking at hundreds and hundreds and hundreds of listings, that gives us a better and more accurate representation of what's really happening with the market. Because when you look at a smaller pool of sales like this, any kind of a big number, low or high, can make a big change in this median sales price number. But we can also see here more negotiation happening. Let's see, hit about 99% in August, and then has just been trending down slightly the months following. Loudon County available inventory is up 20.1%. Compared to last year, pending sales are up 9.4%, and the median sales price is up 11.43%. And as we've seen over the last few months, as I've been doing these reports, Loudon County kind of bucks the trends with a lot of things. Available inventory is being one of them. Definitely seeing more inventory available in Loudon County. And a lot of that can be pointed towards Tellico Village, because there's always a lot of building happening in Tellico Village, which is in Loudon County. So Tellico Village can actually skew the numbers within Loudon County quite a bit, because so much happens in that small concentrated area where you have lots of building going on, and all at pretty healthy prices as well. And you're seeing a lot more homes go under contract because that building's going on, because there is a demand of people that want to be in Tellico Village, which is, if you aren't familiar with it, it is more of like a retirement community where people are going with lots of activities for them to do, and it's surrounded around by Tellico Lake. So if you're looking for some place like that, reach out. Happy to tell you more about Tellico Village. It's a pretty cool place, and lots of people really enjoy it there. Let's just kind of take a look at the Loudon County numbers on the charts. So Loudon County through October, you can see the prices have just kind of been bouncing around, not really high, not really low. Yeah, they've been coming down over this since August, but again, that has to do with home prices, or not home prices, but has to do with mortgage interest rates rising above 7%. They have seen a little bit more inventory come on the market, but they're still just right around 2 months worth, which is significantly lower than a healthy market. They are seeing also a little bit more negotiation as well. In April, they were up over 100%, but now they're bouncing down around 98 to 99%. So a little bit more negotiation happening there. And they're seeing average days on the market bump up over 30 days on average. Okay, Sevier County available inventory is up 19.8%. Compared to last year, pending sales are down 9.5%, and the median sales price is up 23.8% in Sevier County. Let's take a look at those charts. So Sevier County through October. You can see some big fluctuations here. And you can see how much more inventory has been coming on the market in Sevier County as well. That's the active inventory. New listings are starting to come down, obviously, because of what we just talked about earlier. But overall, since May, you haven't been seeing inventory rise in Sevier County. Listing prices bouncing around pretty good, but then have kind of moderated. You're seeing it moderate, but not a big drop. Other than this big drop here, you're not seeing much action since July. Definitely, when you look at the absorption rate, back a year ago, we were under 2 months worth of inventory. And since then, in Sevier County, we have seen inventory rise to up over 4 months worth of inventory. in August, dipped back below it last month, but that's a significant increase in inventory in Sevier County, probably the most we've seen in any one of the counties. So you definitely have more opportunity to find some homes in Sevier County for sure. There's definitely more negotiation happening there as well, probably because supply and demand. There is more supply because there's more inventory. So that means that there's more opportunity for buyers, meaning more negotiation opportunities. We've seen the days on the market go from 24 days in August to almost 50 days this past month in Sevier County. And then lastly, we have Blount County. Available inventory is down 2.5%. Pending sales are down 13.3%. And the median sales price is up 21.97%. We'll take a look at those graphs real quick. Blount County. So we saw a big increase from March through May, and then we've seen things kind of bounce around, and then kind of like we've seen on all of these graphs from August, September, October, we've seen these prices fall in correlation with the rising interest rate. Sold to list price ratio broke through 100%, was at 102 in June, broke through 100% in July, kind of hovered right around there, back up to 99, and then is now around 97%. So there is some negotiation happening in Blount County. We've seen inventory rise, but still well below 2 months worth of inventory. So just not a lot of inventory anywhere really in East Tennessee other than Sevier County, which we've seen has had that uptick to over 4 months worth. That is definitely the anomaly in the area. Okay, so that is all of the stats and the graphs. So you can see a pretty good trend of what has happened there with the rising interest rates over the last few months, how that has affected the market. And we've seen the median sales price fall over the last couple months. So again, that's what we need to keep an eye on is the month-over-month data. Obviously, we're still well above where we were last year. We're still in the double digits. And Knoxville alone was almost 19% higher than it was a year ago as far as the median sales price. So people are still doing well selling their homes, but we are seeing prices moderate because of the interest rates. Let's kind of go over I want to go over some additional things here and talk about why we are different. When you look at the national news, you are seeing a different story that isn't really moderating like we are on a very gradual basis, but you're seeing the national media talk about huge drops in median sales price and huge swings in inventory. Well, one of the reasons we're not seeing those huge swings here is because people are leaving a lot of these other areas and coming to East Tennessee. If we look at this graph here, these are the migration trends that show where people are leaving from and where they are going to. You can obviously, a lot of people are leaving the California area, and we know that for a fact because we see and are dealing with lots of folks coming from California moving into East Tennessee. So you can see all these areas that they're leaving from. The high outbound area is the brownish, tannish area, and then the high inbound is the more purple. Well, you can see Tennessee is definitely in the higher inbound category. So people are leaving these other parts of the country and they're coming to East Tennessee, which is keeping our demand high, which along with our low inventory situation, so we've got a low supply in most areas, and then we still have demand because people are coming in from other parts of the country, as well as people moving within that are already in the area. So demand is staying high, supply is staying low, so we're still seeing our prices hang on. They aren't falling off a cliff like a lot of other places in the country. They're really kind of maybe making a slow decline for now until things change with interest rates. And this shows the year-over-year change in what is happening with numbers. So you can see here that obviously Washington, D.C. had the biggest year-over change. They're only about 5% higher than they were a year ago. California is about 5 to 10% higher than they were a year ago. But you can see how dark Tennessee is, 15 to 20% higher in the median sales price than they were a year ago. Okay, and the reason that I've been saying all along here is why we're seeing over the last few months prices come down slightly here, and in big ways other parts of the country are the rising mortgage interest rates. So they're rising at their fastest pace than they have in more than 40 years. If we look at this graph, you can see when things started going right around here. You can see October 23rd, we were over 7%. So that same correlation, when we saw August, September, October, the price is slowly starting to come down. It directly correlates with what we're seeing here with the mortgage interest rates going up over 7%. And why is that important? This is why that's important. Mortgage payments are directly correlated with interest rates. So you can see what the difference in the interest rate has done over the last few months. So through February of 2020 through December of 2021, your average monthly payment was around $1,200. Well, since then, because of the rise in interest rates through January of 22 to present, it has kicked up almost $1,000 extra a month. So that is a big, big reason why we're seeing people kind of hit the brakes a little bit on what is happening out there in the market. Selma Happ, who is CoreLogic's chief deputy economist, said the rapid increase in prices during COVID-19 pandemic caused many U.S. housing markets to reach a completely unaffordable level for potential local home buyers. On the West Coast and in Mountain West states, home prices are slowing from this spring, the spring's high, but remain elevated from a year ago. By contrast, markets that continue to see an in-migration, so if we go back to this here, looking at the migration, by contrast, markets that continue to see an in-migration of higher income households are still experiencing home price gains that are notably higher than the national rate of appreciation. CoreLogic said that the states in the Southeast, i.e. Tennessee, may be the beneficiaries of this out-migration. Home prices in more expensive states on the West Coast and in the Northeast are likely fueling home buyer enthusiasm for properties in relatively more affordable areas. And that's what we are seeing on this graph, people leaving those states, coming to Tennessee, and on this graph, how the year-over-year price changes are higher. You're seeing a higher increase in the median sales price in Tennessee than you are seeing in these other areas. Now, a new study ranked Knoxville number 31 for the best cities for remote work. So another reason why people are coming to Tennessee. With future rate hikes likely on the horizon, Freddie Mac economists, their latest forecast predicts home prices will decline 0.2% in 2023 nationally. But despite this downgraded outlook, it's unclear how this national forecast will apply to a high growth area like East Tennessee. As far as the third quarter rental market report, here's another thing showing the demand in Knoxville. Knoxville's apartment market stayed strong as demand began to normalize in the third quarter of the year. The Knoxville, Tennessee metro area ranked number 3 among the top 150 U.S. metros for annual rent growth in the third quarter of 2022, outpaced only by Fort Myers, Florida, and Naples, Florida. Similarly, Knoxville ranked number 1 among metros in the South and number 10 among the top 150 U.S. metros overall for occupancy. And multifamily rents in the Knoxville area grew faster than anywhere else in the United States in the third quarter of 2022, according to a recent NAR report. The report found rents in Knoxville grew at more than twice the national average. So if rent is going up and our occupancy is the highest than anywhere else in the nation, that is telling you again another reason that Knoxville has so much demand. Again, with rents, effective rents in the Knoxville MSA were up 19.6% from 1 year ago, outpacing the 10.5% growth nationally. So Knoxville rent growth, almost 20% compared to 10% nationally, almost twice the growth in Knoxville compared to nationally on rents. On average, effective rents are 47% higher than pre-pandemic levels. Rent growth over the past year was highest among regular Class A units. And as far as occupancy, like we said earlier, Knoxville's occupancy remained among the highest in the nation at 98%. So that is just showing you, again, the demand that Knoxville has and why our moderation is not going to be like the moderation that you're seeing in some of these other states where you're seeing prices fall off a cliff. Ours are just slowly moderating down in direct correlation with these interest rates. When the interest rates go back down, which they will, because the reason that they're elevated is because the Fed is working on rates to affect inflation. Once that is done and rates go back down, I think we're going to see things turn again in the other direction. Buyers are going to come back to the market in a big way, and we're just going to see prices continue to go up because our demand is still high and our supply is still low. So again, why are sales coming down a little bit? Like we showed, higher home prices and rising mortgage rates are impacting housing affordability in a substantial way, like we saw in that graph. A dynamic that's pushed some buyers out of the market completely and created downward pressure on home sales. As of now, declining affordability is the largest driver of housing moderation. So people are having trouble affording homes, so they're having trouble buying right now. They can't afford to get into a house. Some can't even afford to get in the game. The monthly principal and interest payment on the typical new listing is up almost $1,000 since the beginning of the year, like we saw earlier, which is a tough bill to swallow for buyers and sellers alike. So mortgage rates doubled over the past year, rising at the fastest rate since 1981. Although unlikely to mimic the 80s, mortgage rates are expected to remain sticky in the near term as Federal Reserve officials appear committed to aggressive rate increases to tame inflation. Even still, Freddie Mac's latest forecast predicts rates will fall to an average of 6.4% in 2023. So, heading into 2022, the monthly principal and interest payment on a typical new listing in Knoxville is around $1,300. That's risen to $2,300, like we saw in the graph earlier. So again, affordability is the biggest issue that we're having right now, which is moderating our prices. And once again, as we saw here, while our prices are moderating, they're coming down a little. In other parts of the country, they're coming down a lot. So I would say don't let this scare you. I think it's still a good time to buy a home simply because there's less competition, because once those rates come back down, we're going to get back into the situation we were in before where competition is high and you're going to have to start losing those contingencies again, like appraisal, inspection, things like that. Those things you can get under contract now, under list price, with your contingencies now, granted at a higher interest rate, but remember, you secure the house now at the lower price with those contingencies, and you can lower your rate later by refinancing. And there's even some opportunities now in negotiations where you can have the seller pay concessions to lower your rate now. So there are options out there. I hope this was informative. If you have any questions at all, reach out to my team. We are here for you. If there's areas specific to Knoxville that you want more detailed information on that I didn't cover, like a specific subdivision or even your specific house or a specific area of town, just reach out to me or comment below and let me know, and I will definitely get you that information so you can be informed and educated, which is what I want you to be and why I do this for you. I hope you're having a great day. This is Troy Stavros with Doorbell Real Estate, and we will talk to you soon.